We are going to see about the balance sheet for the firm Sundaram Businesses. So, balance sheet is a financial statement that reports a company's assets, liabilities, and shareholder equity. So, the balance sheet is one of the three core financial statements that are used to evaluate a business. It provides a summary of a company's uh, and here balance sheets has two components. One is asset and one is liability. So in the firm Sundaram and Businesses, we are going to see the balance sheets for the Sundaram and Businesses on 31st of December 2010. So as the balance sheet is divided into two, assets and liabilities. Under assets there are three components: current assets, investments, and intangible assets. So under current assets, uh, cash cash, short-term investments, accounts receivable, other receivables, inventory, supplies, and prepaid expenses. And these all, if we all add all of these, and it will be our total current assets. And under investment, property, plant and equipment, land improvement, buildings, equipments, less account depreciation, property, plant. If we add all of these, it will be our investments. And intangible assets, other intangible assets, and if we add all of this, it will give us the total intangible assets. Apart from this, there are other accounts. If we add everything, that is current assets, investments, and intangible assets, we will get the total assets. Yeah. Similarly, the other component of the balance sheet is liabilities. So liabilities also has three parts. First one is current liabilities, and second one is long term liabilities, and third one is stockholders equity. So under current liabilities, uh, there are subparts as follows: short term loan payable, current portion of long term debit, accounts payable, accrued company and benefits, income tax payable, other accrued liabilities, deferred revenue. If we add everything, we'll get the total current liabilities. And in long term liabilities, we have notes payable, bonds, deferred in taxes. So if we add all of this, we'll get total long term liabilities. So under stockholders equities, there are common stock, retained earnings, um and retained earnings and less treasury stocks. If we add everything, so we'll get total liability and stockholders equity. So in this case, the current assets. So under current assets, cash cash is being made for rupees 2000, and short term investments for rupees 10,000, accounts receivable for 39,500, other receivables for 1,200, inventory for inventory for 30,800, and supplies for 4,000, prepaid expenses for rupees 1,500. If we add everything, we'll get the total current assets, um, that is uh, 89,000. And the second part is investments. For land, it is rupees 5,000, and land improvements for rupees 7,000, buildings for 1,80,000, equipments for 2,10,000, and less account depreciation for rupees 56,000. So if we add everything under investment, we would get the rupees 3,37,000. And under intangible assets, assets for rupees 1 lakh, other assets for rupees 20 lakh 5,000. So total intangible assets will be for rupees 30 lakh 5,000. Other accounts rupees for 3,000. If we add current assets, investments, and intangible assets all together, we will get the total assets of firm. So in this case, if we add current assets, that is 89,000, and investments that is rupees 33 lakh 7,000, and total intangible assets 30 lakh 5,000 plus 3,000, which is other accounts. If we add everything up, we'll get total assets um, which is 7 lakh and 70,000. If we come to the liabilities, under current liabilities, short-term loan payment is rupees for 6,000, and current portion of long-term debt is for 14,000, accounts payable for rupees 19,900, and benefits for rupees 8,500, income tax payable for 7,000, other accrued liabilities for rupees 4,100, deferred revenue for 1,500. So if we add up everything, we would get the total current liabilities, that is rupees 61,000. And long term and under long term liabilities, notes payable for rupees 18,000, bonds for rupees 3,75,000, and deferred incurred taxes for rupees 27,000. And total liabilities total long term liabilities rupees for 4,20,000. So if we add everything under long term liabilities, it would be rupees 4,81,000. Stockholders, under stockholders equities, the stock is rupees for 1 lakh, retained earnings is for 2,30,000, and treasury stock is for rupees 59,000. So total stock equity is 2,89,000. So to get the total liabilities, we should add current liability plus long term liabilities and plus stockholders equity. So current liabilities, which is rupees 61,000, plus long term liabilities, which is rupees 4,81,000, and stockholders equities, which is which is 2,89,000. If we add current if we add current liabilities, long term liabilities, and stockholders equities, we get rupees 7,70,000. So we can see that the total assets is equal to the total liabilities. So total assets here is 7,70,000, and the total liability is also 7,70,000. So we can conclude that here the balance sheet is tallied with as the total assets is equal to total liabilities. Thank you.